All right, you should see a big black screen with blue letters on it and a blue eye. Does everybody see that? All right, so I'm going to walk you through. This is the subject is bonds. I'm solid, man. I'm good.
Hey Hubert, can you hear me?
Yeah, I can hear you now. I couldn't hear you earlier though.
Oh yeah, I thought that I was just getting ignored by AJ.
No,
Okay,
no, I couldn't hear you. It's all right, man. I've already started. I'm solid.
all right, good deal.
Thanks, man. Bye. All right, so my name's Hubert Centers. I'm going to walk you through how I made $6,280.25 in only 10 days without risking more than $312. Now, heads up, spoiler alert, this is about trading bonds and notes. How many of you have never traded a bond or a note in your life? You may even think like a note. That sounds like something my grandpa would invest in. It's not that type of note. It's a futures contract. It's the 30-year bond, the 10-year note, and they're good instruments to trade if you never trade them. So in this presentation, I'm going to try to talk you into. I'm going to try to sell you on the fact that I think that you might be able to make some money trading bonds if you're losing money trading stocks or options and stuff like that. Okay, so now I already know how to trade these things. Now, even if you don't buy the course that I'm going to offer you at the end, the webinar will still be of value to you because I'm going to walk through a framework of showing you how I think that you should, go about picking a better market for you to trade. If you're struggling with trading, if you're a level 3 or below and you're trying to get to level 4 and above, this will help you out. So let's get started. So when we're looking at this information, the first thing I have to be aware of is we're really trading here. When you look up the definition of trading and or investing in the dictionary, if you have one around, or Google it, it does not say guaranteed wealth generation with zero risk. What we do is called speculation. It is inherently risky, has a lot of risks with it. You are probably going to lose large sums of money trying to figure out this game on your own. That's how everybody does it, right? It's either you pay somebody to teach you how to avoid some of the landmines, or you learn by the school of hard knocks, and heads up, that's even more expensive. So it's really important that you understand that you should never risk more money than you can afford to lose, because chances are it's going to happen, and it's going to happen often. Now, make sure that you read CFTC Rule 4.41. I used to be registered. I used to be a registered Series 3 and a registered Series 30 when I owned a futures introducing brokerage. I no longer do that, so I don't have to be registered, so I'll let that stuff lapse. But I still like to pretend or act like I'm a fiduciary to you. In other words, I want to do no harm first and then show you like, hey, this is the crazy stuff that I do with my money. All right. Now, I like to say that the warning disclaimer is much worse than the one stated on there, that your trading career will probably end up like a bad country song in reverse. Your wife is going to run off with your best friend. Your kids are going to grow up to hate you. Your dog's going to die because there's no cats in country songs. They're going to repossess your Ford or Chevy pickup truck, and they're also going to foreclose on your single wide or double wide trailer. Now, since I have sufficiently covered my ass and tried to scare you at the same time, let's get started here. It is my belief that risk to reward ratios are the key to your success in trading and investing. And I say trading and investing because I've got three distinct buckets that I play with my cash or my net worth. One is super, super conservative, and I just put all my retirement funds over there, and I just put them in index funds. They're usually in Vanguard Total Stock Market Index funds. And I don't touch them. I just leave them alone. The money that I take out of the markets, either the stock options or futures markets or the crypto market, I put over there and let it work for me, so that I'd have the compounding effect of time and not having to, I don't have to worry about beating the market. I have the average of the market. That's bucket one. Bucket two is a little bit more riskier stuff. I would call it the day trading, the swing trading, the crypto stuff, the stuff that I invest in Silicon Valley and stuff like that. And then there's the super sketchy lottery ticket. I just need it to hit 1 out of 10 and I'm golden. And that's bucket three. So it's going to be much easier for you if you understand that you're going to be wrong way more than you're going to be right. I personally don't know anybody that is right more than they are wrong. I just don't. Like, if anybody else can, and if you say you are, I'm going to need some statements on that. I mean, brokerage statements, not none of this crazy ass Excel bullshit that people send me, like, hey, I've got this trading system, it's doing really well. I'm like, well, cool, send me your trade statements. They're like, okay, here's Excel spreadsheets. I'm like, that's not real. I need actual verified trade statements in order for you to sway me here. And there's nothing wrong with being wrong more than you are right. That's how this business works. But if you've got really weird risk to reward ratios, that's not going to end well in your favor. All right. So I told you I was going to show you how I made 6,000 some dollars in 10 days. This is how I did it. I was short a contract of the 30-year bond. And you can see here I was up 49.68. And then boom, I closed it out for 49.68. And then I was also short the 10-year, which you don't have to do. That's actually a little double leverage here. I didn't have to do that trade. Here I was up 21.09 and closed out the trade 21.09. So that was unrealized, and then it became realized. Now, if you want to trade larger size, you can. I recommend when you start trading bonds and notes that you start out with the smallest possible size, which would be one contract or one car, and start there. But if you want to add more size, you can. This is an example of a larger trade, and if you want to come to the play with the big boys, I mean, you can level up and trade even more size, right? It's available. The minimum that you can trade is usually one lot. That's a minimum that I know that you can trade anyway. And this one, you can see that this is just one trade, 30,312.50. If you add more size, it's going to be more profit, and it's also going to be more loss. So just keep that in the back of your mind. Now, before we go any further, let's figure out where you are on your ladder of your journey here. Most people start out at level 1, where they get really, really, really good at burning through massive amounts of cash. And then you either get frustrated or pissed off, or you're like, I can't handle this. I got to slow down this burn rate. And then what you do is you go, okay, I'm going to slow down this burn rate. I'm going to roll through this money a little bit slower. And then by either just sure will, determination, grit, or a little bit of luck, you end up to level 3, where you make some money and you give it all back. You make some money, give it all back. Make some money and give it all back. Now, if you stick long enough and you just don't give up, eventually some of you will make it to level 4, where your P&L curve will look like this. Okay, from the lower left to the upper right, heads up, you're still going to have some jaggy drawdowns, because we all do. All right, you're going to have to learn how to survive the little jaggy drawdowns. Keep them to a minimum if you can. It would be my advice. Level 5 is where you start making a killing. I've got an asterisk. I don't know what a killing is to you. It means it could be $2, $20, 200,000, 2 million. I don't know. Now, once you get to level 5 and above, welcome to the club. You've made it. Once you've got it up, keep growing, and keep kind of doing your thing. Real quick, in this webinar, where are you at? Give me a number of the level that your current skills are at in your trading journey. Are you level 1, 2, 3, 4, 5? And if you have to do 0.5, that's fine too. Or 0.2. It doesn't matter to me. I'm just trying to assess the overall crowd here. 3, 3, 3, 1, 3, 2, 4, 1, 0.5. You ones and 0.5s, just hang in there, Andy and Dave. Just don't quit. 2, Joseph, hang in there. Below level 1. That's all right, Karen. Just hang in there. I mean, we all go through it. Nobody starts at level 5. And if they do, if they start at level 5 and they just get lucky and have a couple good trades, whoosh, they immediately get demoted down to level 1 again. So don't worry about it. All right. So a couple things that you can learn from this presentation that can potentially help you go from a level 3 to a level 4. Now, heads up, before we get any further, I just want to be 100% transparent here. I can't guarantee you anything. I cannot guarantee you not one single thing in life. And I damn sure can't guarantee you anything in the trading world, right? But it is my belief, if you find something that's easier for you to trade, and if you use good risk to reward ratios, I think it's going to be easier for you to jump from level 3 to 4. Okay. So have you ever done this before, where you've had just a nice little losing trade? And we'll say nice because they suck. And then just as soon as you're up just a little bit of cash, you just cash out of it. Anybody ever experienced that, where like, man, I just got smoked by the market? I mean, charcoal briquette. Oh, I didn't use a stop loss. I forgot to put my bracket trade in correctly. Or I just turned my head, or somebody called me. And then you're like, man, it sucks so bad. You're like, and then you're in a little bit of a trade, and you're like, okay, I'm gonna jump out real quick. As opposed to letting it run, you immediately, if it went for you or against you, you jump back out of it. It's because you got that mental residue of that butt whooping that the market just gave you, right? So you're just chicken shit, pretty much, basically, is all it is, right? Burned 125,000. Nice, Karen. Nice. So that's pretty common. It happens to all of us. Don't beat yourself up about it. Just learn to write it down in your trading journal and make notes about it. Going, okay, anytime I have a good size loss, I turn into a chicken shit. So try to avoid the big massive losses, right? Another thing a lot of people will do is they will die the death of 1,000 lashes, where they just really never have any traction. It's just loser after loser after loser. Oh, I got a little win. Oh, back to the losing. Loser, loser, and then back to the win. So in this presentation, we're going to walk through what is, in my opinion, a better way to do this. Now, it's a little bit of grit and will to do this, but it works like this. Style. So we've got style A, we've got style B, and now we're going to talk about style C. Loser, 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 winner, hold the winner. Okay. And then back to business. Loser, 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 and then back to the gains. So we're going to talk about trying to shift you from either style A or B and transition you into style C and try to take you from level 3 and above. Okay. And we're going to do that by picking a better market. But before we do that, let's go through some simple math. Now, when I was in high school and college, I got D pluses. I'm going to put the plus up there because I got the plus. I did earn that in algebra in both high school and college. Math just was not my strong suit. I'm dyslexic. I don't like math. There's tons of stuff I'm not good at, and that's one of them. But let's go through. Now, I will tell you on the previous bond trading boot camp, the average trade that people were making were about 1405. All right. And I'll show you tons and tons and tons of user reviews after this webinar. But if I was going to share with you a trading strategy, and it doesn't really matter what it is, just any trading strategy, and I said, look, this thing works 41% of the time. Would that excite you? Would that make you mad? Would you want to leave the room? Like, invariably on every single webinar, I always get somebody saying, hell no. Would you take those trades? Or would you take those trades? More details. That's right. That's the correct answer. Like, hey, I need more information. When you say 41%, what? Oh, Karen says, no, I wouldn't do that. All right, cool. So anytime you hear somebody on a webinar say, and I don't care who they are, I have a trading strategy that works 92% of the time. Heads up, they're lying. They don't. They're full of shit. The reason I say that is they might have it for a very short amount of time, but it's not going to last for more than 2 weeks. And I've known guys that have had winning streaks for a year or more, and then they'll blow up. So you just got to be careful with that stuff. Consistently, day in and day out, most people are more wrong than they are right. So the only way that you can statistically make money in the markets is by having a really good risk reward ratio. So what we're going to do is we're going to go through the basic math. Okay. We're going to pretend we're going to have a series of 10 trades, and we're only going to be right on those 10 trades. We're going to be right only 4 out of the 10. Okay. So in this scenario, we're going to risk 5 ticks to potentially make 32. The math that comes down to is we're going to risk $156.25 to potentially make $1,000 or more. Now, let's go through the math. You're going to have 6 losers times 156. You're going to lose a grand total of negative $936. Now, you're probably saying, I thought you were going to show us how to make money with this. Okay, so now we have to wait for those winners to come. We're going to have 4 winners times 1,000. That's 4,000. Now, even in states like Kentucky, where I live, if you take 4,000 and you minus $936, the magic math is going to come out to be $3,064. Now, let's pretend I said I couldn't do it before. Let's pretend I can guarantee that this is going to work like this every single day for the next 30 days, which I can't. But let's pretend I have those powers. Now, if I told you that this thing worked 41% of the time, and that's going to be the result for the next 30 days, would you take it, yes or no? Yeah, most of you was like, yes, it's twice on Sunday, right? If you would let me, right? So let's say it's worse. Let's say that I'm not right. There's no way I could catch this four times out of 10. Well, what if you could only catch it 3 times out of 10? Where you had 7 losses, minus 156 times 7, you would lose $1,092. But your 3 gains of 1,000 times 3,000, you'd still come out net $1,908. So really what you have to think about is if we're risking $156 to potentially make 1,000 every time, what's the ratio that you're willing to take that trade? Is it 1 out of 10? Is it 2 out of 10? Is it 3 out of 10? I mean, clearly you would take 3 out of 10. Would you take 2 out of 10? How many in here would take 2 out of 10? How many in here would take 1 out of 10? It depends on the math, really. It doesn't depend on how successful a trade setup is. It depends on how much money you make when you're right and how much money you lose when you're wrong. Heads up, you're going to be wrong more than you're going to be right, unless you're just really super duper gifted. And if you are that, please let me know. I want to throw some money at you. Okay. All right. So you now have a new opportunity because right now is a great time to learn how to trade bonds and actually trade bonds. Right now, they've went through a nice little trending period and then they consolidation and they're about to break out again. These types of trades and moves have the potential to make a big difference in your trading career. It will not be easy if you've never traded them before because it's a new thing and you're not going to understand everything about them. And it's just going to be like, oh man, I'm a little scared. I've never traded these before. I don't know what they're like. Don't worry, I'll walk you through that. So, what is the best market for you to trade? So now what we're going to do is I'm going to walk you through that thing that we all go through. Don't you wish that brokers would give you like a questionnaire that would help you figure out what's the best thing to trade, like a lot of the dating apps do and stuff? But you probably did what everybody else did. You started with stocks, options, futures, forex, cryptos. You end up going wherever the action is or wherever your broker recommends you go to because he's got your best interest in mind, right? And then you end up trading those things because they have the most volume. And then what happens is you trade them, you get chopped up, you have some losses. Then you start asking yourself really good quality questions like, why can't I do this? This is just too dang hard. The market must be rigged. I mean, because I'm smart, I'm successful. This is just too darn hard. Now, a real quick myth buster for you here. Me and all my professional trading buddies, we can't see your stop, nor do we care about them. And if we did know about them, we wouldn't do anything about them in the first place. We're doing our own thing. We're not going to collectively gang up on you and try to move $4 billion worth of market cap to come get down and get your one lot on an options trade or 100 shares on stocks. We're just doing other stuff. All right. I know it seems like it because I've been there and done that before. Go, man, it's like the market knows exactly where my stop loss is and they just tag it and then take off. There's not a conspiracy. The market doesn't care about you at all. I mean, at all, right? They don't care about you at all. They don't care if you're there or not there, alive or dead. It's just going to do its thing. All right. Now, the bad news is you have been betrayed a little bit, and it's not your fault. It's not your fault. You have been lied to. You're sitting there going, I knew somebody lied to me. This is the financial markets. And a little bit of that is true, right? Like there's no financial markets out there or instruments that are designed particularly to do like with your best interest at heart, right? Every financial instrument that I know has a cost associated with it, and it's designed to extract you from your money, right? So now there are some better and worse ones like index funds, stuff like that, a little bit cheaper, and you're just going to ride time over time. Now, who are they? Well, all this stuff gets passed down, and it gets passed down from other traders and the media and investors, and it just gets passed down from trader to trader over time. Did you physically test what was the best market for you to trade? I know I didn't when I first started out. I watched the guy make like $32,000 in 18 minutes. I was like, how'd you do that? And then he taught me how he did that. I didn't have any clue if that was the best market for me to trade. I just saw some really big P&Ls and I was interested in that. Did you test it or did you just believe what your brokerage firm told you? You should always trust, but you should always also verify. My grandfather said, son, it's fine to trust people, but verify what they say. That comes from me too. Like anything that I'm saying you right now, just assume that I'm lying to you and verify it for you. Just do your own back testing. Think about it. If it works, keep it. And if you make money with it, keep it. And if you don't, throw it away and use something else. Now, true or false, if you can trade any market. Do you believe this to be true or do you believe this to be false? If you're a professional trader or a hobbyist, and if you've got some really good trading chops, and if you can trade, you ought to be able to pretty much damn near trade anything. True or false? I would say that's true with a big old but, right? There's a couple markets that I stay away from because they've got my number. I can't physically make a profit in natty gas. It hates me. We don't get along. Every time I touch it, I lose money. So what I do is this revolutionary technique around natty gas is I just never trade it. All right. So and also with silver, I don't have a really good feel for silver. Now gold, I'll smoke gold. Crude oil, smoke crude oil. Index futures, bonds, stuff like that. That's fine. I'm competitive on a lot of that stuff. And I would say it is true that if you can trade, you should be able to trade any market, but it's going to be a lot easier if you trade something that matches your trading style and your personality. If you don't match your trading style to the right market, it is going to be very painful and very frustrating for you. Trading the wrong market and the wrong style for you is like hitting yourself in the head with a hammer. It's going to feel great once you stop. Now, think about this statement. Is there anything wrong with trading better faster? And I'm not talking about a shortcut to long-term success. And I'm not talking about a get-rich-quick scheme because I don't believe in those things. But what if I could share with you a way to increase your rate of progress and improvement? Do you think that you could do that? And the only way that you can do that, in my opinion, is figuring out what markets you're good at and what markets you're not good at. And the only way to do that is to first figure out how to pick the best market for you to trade. So let's go through that framework. And I believe that if you go through this, regardless if you buy my course or not, I don't care one way or the other. You should go through this exercise, though. First, we have to figure out, are you a trend trader or a counter trend trader? All right. So the analogy we're going to use is a sprinter. Are you a sprinter or a marathon runner? And some of you are going, I'm not a runner at all. I'm a walker. All right. If you're a sprinter, you're going to like markets like this. Up, down, up, down, up, down, up, down, breakout. Got you, sucker. Up, down, up, down, up, down, up, down. Breakout. Got you, sucker. Up, down, up, down, up, down. All right. If you're on this webinar right now at 11:27 a.m. East Coast time, and that pattern looks appealing to you, and you're like, man, I love trading stuff like that right there, then just type an S in the chat box really quick because you're a sprinter. You are what we call a counter trend trader. So we've got 1, 2. How many? We got any more? Pamela, Ricardo, GUNA, S&M. That's fun. That's pretty funny. All right. So for you, bonds won't be that attractive. I recommend you do not buy my bond trading bootcamp because it won't help you much because the bonds don't move like that a ton. They move like that a little bit, but not as much as a lot of other markets. Like every market goes through phases of consolidation and then trend phases. But what you want, if you're going to be a sprinter market, is you want to be in the index futures, E-minis, natty gases like this, silvers like that to a certain degree, and there's certain stocks and currency futures that are like that. Okay. Now, on the other hand, if you're a marathon trader or a trend trader, and if this looks more appealing to you, up, retrace, up, retrace, up, retrace, up, consolidate, then retrace, or it'll do this: up, consolidate, up, consolidate, up, consolidate, and then retrace. If these marathon markets look more appealing to you, type in M. This means you're a trend trader and you like things that trend well. And so bonds and notes will probably work out well for you. Okay. If you're trading markets that aren't doing that and you're trading stuff over here that looks like pattern A, that could be one of your problems, right? You're just in the wrong place at the wrong time. And you could do the right thing at the right time, but be in the wrong instrument and it's not going to help you any. All right. I don't like the or, always prefer and. Yeah, maybe, right? I guess. I'm not saying you can never be a sprinter trader. I'm saying you're probably going to definitely lean 70-30, right? You're definitely not going to be 50-50. Me personally, I don't think it's doable. I think you're going to gravitate to one more than the other. All right. All right. Now, the second thing is, after you figured out that you're either a trend trader or a counter trend trader, you have to figure out the markets that have the best particular ranges for you. We're going to use a free tool for that. It's going to be called an average true range. You're going to set it to a 14 period, and that's going to tell you how thick or wide that range is. And here's the analogy we're going to use for this example. Let's say that I could guarantee that Apple, AAPL, is going to have a range of $50 a point every day for the next 2 weeks. Okay. Could you get 5 points out of the 50 if you knew Apple was going to have a range of 50 points a day for the next 14 days. I'm pretty sure I could pull that off. Most of you in here could pull that off too. Like, yeah, I could figure that out. If Apple's going to be 50 points a day, I could probably get 5 of those. Now, let's say that it's the average true range was lower, and let's say that the Apple's range over the next 2 weeks was going to be 10 points. Could you get 5 out of that 10? I'd be like, I don't know, man. It's going to be tough. I'll be maybe, and it'd be a real hard maybe, right? I'd be like, I don't know, man. I don't know if I could do that or not. You see what I'm saying? So you have to pick, number one, the market that fits your personality. If you're a counter trend trader, counter trend markets. If you're a trend trader, trade trend trading markets. Then you want something to have a nice, wide, thick range for you to play with. And then third, and this is a little bit harder. I don't have a lot of good analogies for this. You have to match your personality to the market that you're going to trade. How you do that is you open up a demo account and you trade a bunch of different stuff until you find 3 or 4 that you're like, man, these are really, really fun. These are nice. I really get along with this market. And you may get along with markets that I don't get along. Maybe you love Natty Gas going, I love Natty Gas. Like me and Natty Gas are just in sync. For me, all it does is pick my pocket, so I stay away from it. So those are the 3 things that you're going to have to figure out in order to get you from level 1, 2, and 3 to go to level 4. All right. Now, why trade bonds? Well, number one, they have really nice ATRs. In other words, they have a nice thick range. And I'll show you all this stuff live here in just a second. They trend really well, which I believe them easier to trade if you're a trend trader. In other words, they're easier on the trending mechanism. They're slow, they're methodical, which makes them easier to hold winners longer. And that's how you're able to make the $3,000, the $4,000, the $10,000 over a very few days, because they range good and they trend well. Now, it does not matter which way interest rates are going. They could be going up or down. It's not really going to matter. Here's my style if you're interested. Like, I'll make money from point 1 to point 2 by shorting this. I'll avoid most of this, not all of it, but most of it. And then I get busy again from 3 to 4. And then I get busy again from 5 to 6. But for the most part, I try to avoid this slop and chop right here if I can. Okay. And there's mechanisms to teach you how to avoid chop. It is not impossible. It's fairly easy to avoid. Now, when you start looking at bonds, there's several things that you're going to need to know. The basics, the months, the time, the symbols, the tick values, domes, margins, and you're also going to have some really good risk reward ratios in order to be profitable in that business. Now, let's go through margins, intraday and overnight. Now, intraday would be a day trade. Overnight would be a swing trade or an overnight swing trade. Now, most brokerage firms have their own minimums. They do all have to go by the exchange minimums, and then they can tack on bonus on top of that if they want to. So it's very important that you call your broker. But you could get as low as $300 to $1,000 intraday margin. I know several brokers that charge $500 intraday margin to place a trade. So you do not have to have a massive account with this. Also, when you're trading bonds and notes, there is no pattern day trader rule. If you've got $3,000 in an account and you want to trade it 400 times a day, knock yourself out. They're not going to care not one bit as long as you got cash in your account. They're like, work it, man. Go to town. Now, if you're doing overnight margin on the 30-year, in other words, if you're holding this trade for more than 24 hours, then you're going to have $3,375 in your account to trade the 30. The 10-year, you have about half of that. The 10-year note, you only need $1,490 in your account, overnight hold. And the 5-year, $743. The 2-year, $304. There are all kinds of different bonds and notes that you can trade. So there are the margins. Time to trade these suckers. They open up at 6 p.m. East Coast time. So Sunday at 6 p.m. So this is Saturday. So tomorrow at 6 p.m. they'll open and they'll close all the way throughout the night and until Monday. And then they'll close Monday at 5 p.m. They'll close for an hour and then they'll open back up again at 6. You need to use the rules to your advantage. Now, one of my pet peeves is when people go like, well, Amazon didn't pay any taxes last year because of a tax loophole. Heads up, it's not the tax loophole, guys. It's called the tax code, and you need to learn how to use it to your benefit. Like people, now there are people that will definitely not pay taxes, and they should have to pay taxes or go to prison, because you should always make sure that you pay the least amount of taxes that you are legally obligated to, and no more, right? It's called the tax code, and you need to use it to your benefit. But it's not a tax loophole when it's in the tax code. Same thing. If exchanges have rules for you to abide by, then abide by those rules, but don't put yourself at a disadvantage. So this is an example of what I'm walking you through here. Intraday margin. So if you placed a trade at 9:30 in the morning and you held it till 4:55, you're going to most likely be charged with intraday margin. So it's going to be like $300 to $500. Okay. If, on the other hand, you understand how the rules are written and different brokerages follow different rules, so it's important to pick a good broker. You could initiate a trade at 6 p.m., hold it till the next day to 4:55, and a lot of brokers are going to only charge you intraday margin, not overnight margin. Now, some will do overnight margin because like, we don't want the risk. So that's not a loophole. That's an exchange rule or a brokerage rule. So in other words, you can pay a lower fee by just jumping out of the trade before the close and then reinitiating it again. Now, if you want to stay in it overnight, like you open it up at 9:30 in the morning and hold it past at 5, that's fine. You're just going to be assessed overnight margin. Same thing. You can open one up at 6 p.m. and hold it till the next day at 5:05. That'll be overnight margin. All right, these are the bonds and the note markets that I like to trade. And if you're never traded these things before, I would probably start out with my second favorite, not my first favorite. My first favorite is the 30-year bond. My second favorite is the 10-year note. My third favorite is the Euro Bund. Now, I don't trade a lot of 5s and 2s just because the ticks are too far to keep me interested. But these are a good way to cut your teeth on too. Probably the best real well-rounded market to start out would be the 10-year note. Okay. And these things still trade in fractions. So if that freaks you out, we're about to go through a little fraction math quiz here. And remember, I got D's in algebra. So if I can handle this, you guys can handle it too. All right. So you should have a screen on your a little slide that says nothing on it, but a bunch of weird numbers. It'll have blue, gray, red, and black. Do y'all see that? What we're going to do is we are going to pretend that you are in a live bond trade. You're in the 30-year bond, and you're long at 135 here at 0.1, 135. So just to make sure everybody's following me, type in the chat box the number 135 for 135. And then when I see enough of them, we'll move on. All right, I'm already seeing them. All right, we're going to pretend that you're currently long at 135, and now you've made one tick, which is a minimum move that these creatures are allowed to make. It's the minimum increment that they will move. It's called a 1/32. We call that a tick. All right, and all that means is that's one minimum move that these little suckers will make. So if you went from 135 to 135 and 1/32, you made one tick and you will be paid $31.25. So now I'm going to test your math abilities here. Let's say you went long at 135 and you held till 135 to 30 seconds. How many ticks is that? And how much money did you make? How many ticks did you just make or transactions? And how much money did you just put in your pocket if you exited at that point? That's right. 2 ticks. That's correct. And $62.50. Correct. So see, they're not that hard to figure out. Now, 10-year notes, they trade in 64, so they're going to be, they're not going to be $31. They're going to be $15 a tick. All right. So they're just a little bit different. Now, let's pretend that you held this thing from 135 all the way up here to 136. How many ticks would you make if it moved from 135 to 136? And how much money would you make? It's if you want to cheat, you can. The answer's on the slide. That would make you 32 ticks, 32. You remember your basic fractions equals 1 full point. 1 full point is worth $1,000. Okay. So pretty simple math. Now we're going to get into the semantics of this setup. Okay. There are several different trade setups that I like. I'm going to teach you the basic concept of an 8-tick reversal. Now you can do a 12, you can do a 16, and a 32. They each need to be done at a specific time, depending on the range. Okay, but I'm going to teach you the 8-tick in today's seminar. And what we're going to do is we're going to go under the suspicion that we've got a market going up or down. It's going to pull back and then continue in that way. Okay. When we see this either high or low here, we're going to start counting 1, 2, 3, 4, 5, 6, 7, 8. We're going to place an 8-tick reversal to buy here. We're going to place a 5-tick stop loss for a 32-tick target. Our math on that is we're going to risk $156 to potentially make $1,000. So our risk to reward ratio, we only need to be right about 2 or 3 times on this trade, and it's still going to pay us very, very well. Now, when you're looking at the bond reversal trades, these are some points you need to pay attention to. Look for a higher low. You want to try to stay on the right side of the daily trend. Okay. You can trade this intraday or overnight, either one. The 30-year has these components: an 8, a 12, a 16, or a 32. I would just pick 2 of those if you first started out. I wouldn't do 3. You don't need to until you get feet on the ground. And then you need to be really, really careful about what the average true range in bonds are. So if I'm going to tell you like, hey, bonds has a 1-point range, which basically says 32, 30 seconds, and if we're in here and the bonds are already up here, and I go, hey, you're up 28, 30 seconds on the day, the range is, do you think it's going to be a smart trade to let it pull back 8 ticks? Probably not. You're going to get stopped out on that. The average true range, if we know the average range is 32 ticks and you're at 28, doesn't make a whole lot of sense to do this trade. Okay. So, and I can go through the course. I'm like, hey, this is a good time to do this. This is a good time to pass this. All right. So let's go through this example. So number one, we want to stay on the right side of the daily trend, and don't let this slide fool you. It says 2013. It's just an example. I'm going to show this to you in live in full effect. I've just been doing this stuff for such a long time. I use the same PowerPoints for the examples. So we've got a market here that had a massive down move followed by a massive up move, and then the up move is now being violated, and we have a sell-off, a consolidation, and a sell-off. So we're going to make the decision. We only want to take short trades, and we want to avoid longs like the plague. All right, cool. So we know the direction. You got to do that first. Pick the direction. All right. And I'm going, okay, bonds, I want to trade you to the downside, not the upside. Now, I have a 3-strike rule. I am not allowed to have 3 consecutive losses within a 24-hour time frame. That is my max. I'm allowed to be wrong, okay? And then if that happens, I just got to pause and take off a day or 2. In this trade setup, we've got the direction going down, and right off the bat, I get in this trade and I get stopped out. So strike 1 minus $156.25. I see another one that I like. I short it here. Boom. I get strike 2 minus $156.25. So if you're keeping track at home there, I'm down about $300 on the day so far, right? All right, I go, all right, bonds, you got me. I had you pegged as going lower. Clearly, you're not going lower today, or you're not messing with my setups the correct way. And then I say, okay, I can either do one more trade here in the AM session, all right, or I can go, I'm just going to wait until they close. I'll let them open up tonight, and then I'll throw another trade on tonight and see if that treats me any better. So I'll go, okay, let them open up. They open up at 6 p.m. The market goes up, which is the wrong way. Then it drops for me. I'm like, now we're talking. And then I notice this little bar here starts to bounce, and I go, okay, that could be a potential low. 1, 2, 3, 4, 5, 6, 7, 8. I'm going to short it there. I'm going to use a 5-tick stop loss and a 32-tick target. I do not get stopped out. And then the next morning when I wake up, my 32-tick target gets met. So I make $1,000. Okay. So we take 1,000 minus 300 equals $700. Pretty simple, right? And that's just a one lot. So let's go through the actual mechanisms of finding this thing. So once again, I had strike 1, strike 2. The market opens up at 6 p.m., goes higher, and then puts in this low. Now, I don't know that this is a low, because a lot of people are like, oh, how did you know it's a low? I didn't know that was a low. I didn't know until this green candle closed, and I was like, oh, that can potentially be a low. What was that number? Oh, that number was 146 for 30 seconds. Okay, cool. And then all I do is I do basic math in my head. I go 146 for 30 seconds plus 8 is what? What is 4 plus 8? Pretty simple. 4 plus 8 is 12. So I go, okay, I want to short this thing at 146, 12, 30 seconds. Okay. Now, I know what my entry is going to be. Now, whether I get filled or not, have no clue. Right. Now, and then what I do next, I go, okay, I need a stop loss. 12 plus 5. So I need a 5-tick stop loss. That'll be 17. My stop 17, 30 seconds. Okay. 146, 17, 30 seconds. Also need a target down here. My target is going to be 145, 12, 30 seconds. Now, heads up. This trade would have worked here, here, here. This one, it didn't retrace enough. And then here, it would have got you in, but you would also been stopped out on that one. Okay. Now, I wake up the next day, and I initially had a risk of $156. So what I do is I trail my stop loss. I lock in $375. About 60 seconds later, my $1,000 target had been tagged. All right. So that's how the setup works. Let's go over here and do it for real. Now, unfortunately, the markets are closed. I can still use my charting package, but I'm not going to be able to execute a trade until tomorrow at 6 p.m. But I can still walk you through the process of how I do this stuff. So the first thing I have to do is I have to figure out which way the market's going. So one way I'll do that is I'll look at the Euro Bund and see which way. All right, now let me show you why I love trading these things. If you're a trend trader, and these are just the live markets right now, do you think you could potentially pull some points out of this market right here? Yeah, you'd have to be pretty lazy in order to not do that, right? Like that's a pretty solid trend, right? It just makes you look way smarter than you are, right? That's the Bund. So I use this for a directional bias on our 30-year and our 10-year, okay? And then also, you can also say, okay, let's look at our 30-year, which is at US on TradeStation. And on this scenario right here too, all right, this you should be able to make some good money on. This, it's not as easy, although we're currently right now in the middle of bond trading boot camp, and in this section right here, we've been able to make $3,000 just in this section right here in the consolidation mode, right? Now, I'm going to back up and show you why I like trading these things so much. I'm going to give you a weekly chart and condense it here. This is a chart of bonds. Notice how it trends really, really upside and downside. There'll be some consolidation junk in there too that you have to avoid. It's not that hard to avoid though. That's the 10-year, or that's the 30-year. Here's the 10-year. This is a 10-year note. I'm going to zoom out so you can see the trends. Look at these trends right here. Look at them. Look at that. Just straight up. And then it'll pull back, and then straight up, and then it'll pull back, and then look at here. On the weekly chart, the 10-year is just now about to break out. So it's about to have a nice little new up move. So that's one of the reasons I like to trade them a lot, just because they are really, really trendy. They're really slow and methodical. But let's go back here, and let's go back to the 30. All right, so we're going back to 30 at US. So the first thing I'm looking for, is it above the cloud? Yes. Above the cloud here? Yes. Above the cloud here? Yeah, close enough. And then over here, you see this chart right here? This will tell me my time frame. If all of these are green, I should be long. If I've got one that's a different color than green, my time frames don't match up. So right here on the shorter time frames, I've got 2 yellow just because the last 2 bars went into the cloud. So I've got the daily up, the 60 minutes up, and the 10-minute is going, I'm in the cloud. Be careful. I would still go long on that, okay? And for this example, we're going to say long. So what I would do is I'd go back over here. I got to figure out which trade I'm going to be in, okay? I can either trade the March contract right now, or I could trade the June contract. For me, I would probably trade the June contract because I'd want to stay in it longer. Like March is just around the corner, right? Like it's right now we're February the 23rd, and the second week in March, I got to stop trading March and start trading June. So if I want to stay in the swing trade a little bit longer, it's smarter for me to potentially trade the March, okay? But right now, currently, it's smarter to stay in the June contract just because I'll have a little bit more time for this trade to kind of percolate. But for simplicity purposes, we're going to trade March just because it's the current price action. So everybody notice how thick this range is. We had from 145, 21 30 seconds, all the way to 146, 25 30 seconds. That's bigger than a point. Nice and thick. So if we were long mode only, what I would do is I would look for the most recent high point, which would be right here. And I would count back 8 ticks. So I'd say 17. And then I would come back here and just go boom. It'd be, let's do it right here on the matrix. It'd be even easier. I'd go like this right here at 17. I'd go 1, 2, 3, 4, 5, 6, 7, 8. So I'd be right there. And then I would just place the bot. Now I can't do it because the market's closed and it's going to say, hey, genius, you can't place that trade. The market's closed. But that's where I would place that bid. All right. And I would have a 5-tick stop loss. I'll show you what it'll say. You can't do that outside of normal hours. All right. And then it would place my 5-tick stop loss and my 32-tick target. I also build an indicator that makes it really easy for me to do this type of stuff. So I can just look at, all right, an 8-tick reversal off of this high, think I can go like, oh, that's the short side. Let me get the long side. The long side's over here. All right. Here we go. I can do this doing the same exact situation by looking at, let me remove this one. All right. So I know we're going up and I want to be long only based upon my direction. So then I just look for my high points and I go, okay, this is my most recent high point. I click there. I hold down control and it goes, all right, there's an 8-tick reversal right there. So I'm just looking at a 5-minute chart. I know the direction of bonds are up. I'm going to pick my most recent swing long or swing high right here. Boom, 8-tick reversal. So from this high watermark of 17, I count back 8 ticks, 5-tick stop loss, and then my targets will be $1,000, $2,000, and $3,000. Let's go over it one more time. Let's make it simple, okay? All right. 30-year bond above the cloud, go. Above the 60-minute cloud, go. Pretty close to above on the 10-minute, close enough for me, go long. Okay. Then what I'm going to do is I can either look at the 3-minute chart on my chart here. I'm just looking for a swing high or a swing low, just wherever it's at right now. And right now it would be this point right here. 17 would be that most recent high. I know it's going to pull back 8 ticks. So I would go from here. I would go 1, 2, 3, 4, 5, 6, 7, 8. I would bid long at 146, 930 seconds, just by counting on my fingers. I build an indicator just so it's easier for me to do. I can come over here. I've got a 5-minute chart. The time frame does not matter in this trade. It doesn't matter if this is a 5-minute chart, a 3-minute chart, or a 2-minute chart. That swing high is still going to be there. That's that high price swing, right? Then I'm just going to hold down control, left click, entry here, stop here, target one up here, risking 5 ticks to potentially make 32. And that's all I do. That's it. Now, like I said, there's an 8, a 12, a 24, a 32, and that's just in the 30-year. You've also got trades in the 10-year, the 5s, the 2, and different trades on the Bund. So that's how I do that type of stuff. All right, let me go back to PowerPoint. All right, I showed you the setup and the indicators. I got about 8 minutes. So this is the new bond trading bootcamp. Not camp, it's the camp. It's module 1 is low risk, high reward bond trades. Module 2, how to trade trends and trend reversals. Module 3, how to best trail your stops for maximizing profits. Module 4, how to hedge and stay in winners longer. And module 5 is ongoing mentoring. Now, I'm going to give you the past performance is not indicative of future return speech. Module 1, 7 of my favorite bond trades, both swing trades and day trades. One is for wealth building, one is for cash flow. You're going to discover the power of the bond market to see if it fits you personally. It is a great way, in my opinion, when the bonds are moving and you're on the right side of them, to make an extra $8,000 to $12,000 a month trading bonds on a single lot. Okay, the past bond trading boot camps, the past class we're able to make out of 4 sessions, 9,375. The previous session was 6,250, so not as well. And the class before that is $11,872. Currently, I'm in right now in a session trading with people, and we're up like $3,200 over the past 2.5 weeks. But they've been kind of sideways, so we haven't made as much. But they're getting ready to explode back to either the upside or the downside as soon as they make up their decision. So, and that's going on right now. All right. I've already covered what you get with that thing. Indicators. I'm going to give you the indicators that I use in order to use these setups. You do not need them. They will make your life easier. The indicators will help you assess whether the trend is either up or down and whether you should go long or short, so you don't have to just kind of figure that stuff out. So I built specifically 3 indicators to help you do that. The platforms that the indicators work on are Ameritrade, Thinkorswim, TradeStation, eSignal, NinjaTrader, Sierra Charts, and Infinity IAT platform. They're very easy to apply to your charts. We've got these short little videos, and we're going to give you a multi-chart platform license so that you have Thinkorswim, TradeStation, and eSignal. It's just one low price. We're also going to throw in a multi-computer license so that if you have more than a work PC, a home PC, and a laptop, you're covered up three PCs. Very easy to install, short little videos that you watch. But if you're not into installing stuff like that, we can install it for you for free. We have tech support here in the office. You call and we'll control your PC. Does it work on a Mac? As long as you put Windows on a Mac, yeah. It'll work on Thinkorswim. There's not a whole lot of great trading applications, guys, out there for Macs. So if you're going to try to trade, unless you're just going to use TOS, because TOS will work on a Mac, I would steer you away from using it as a Mac for traders. Yeah. If you got TOS, you're fine. Yeah. All right. Who's this not for? If you're a holy grail seeker, if you're a counter trend trader, bonds are not for you. I've already stated that. If you're a holy grail seeker and suffer from hopium, if you think you're going to start out with $500 and by the end of May, your account's going to be $1.2 million, that is a very unrealistic expectation to put on your skills and the market. Those two things will not happen. So don't think about that stuff. If you can't make a decision, and if you like to make things way more complicated for no good reason, please never invest in any of my courses because we just won't get along. Now, if you're looking at the markets and you're serious about making money in the markets, and if you're looking for a proven system, and if you like trend trading, and if you can follow a simple set of rules and directions, then this course will probably be a good course for you. All right. You got to have good setups. You have to have good risk reward ratios. A good setup that goes executed will beat the pants off of a perfect setup that goes unexecuted. Good is good enough most of the time. Do not try to filter out all the losers and the stop outs. That is for suckers, and that's a fool's game. You cannot eliminate all the stop losses. You can mitigate them some, but you can't eliminate them all. Not even Warren Buffett can do that stuff. You got to learn how to enjoy the process, work through the wins and the losses, because there's going to be a lot of both. Here's a fraction of what you'll learn. My favorite bond trading setups to time the markets better, trading rules and indicator settings, checklists with cheat sheets with entries and exits. Every trade will have a stop loss and a target, how to scan the markets for the good ones, how to potentially minimize your risk, how to potentially maximize your gains. Everything is recorded online. The course is 3 hours. It's an on-demand course, and then I'm going to be live trading with you twice a week. Okay. All right, here is the price of the course. But before we do that, once again, you now have a new opportunity, because right now is one of the best times to learn and to also trade bonds. This could be your best year ever. These types of trades and moves have the potential to make a big difference in your trading career. It will not be easy, but I promise you it will be worth it. The course is $1,997. I'm going to throw in 1, 2, 3 actual indicators. So I miscalculated this. The indicators are $497 a piece. And then I'm going to trade with you at least 4 sessions. And I usually throw in more than 4 sessions. It's usually 8. And then I'm also going to offer you a free retake within 6 months. The bond trading bootcamp, I teach it at least once a year. And then everybody, we have about a 50% retake every year from previous students. They actually like to trade with us so much they continue to take it. And every year you take it after that will be $495. It is not an auto renew subscription or anything like that. It's just when we offer it, people go like, "Hey, can I take it again?" We're like, "Yeah, it's $495 instead of the current price." And so you're going to get 8 analysis sessions. That's the grand total of $5,062. Today's webinar price is $997. Now, don't call this telephone number that I have up here. This is just on sides when I have my team here. My team is also off on Saturday, so Jared and Karen are off. So you can use the link. I'm going to put that in the chat box right now and start answering questions. But don't call the telephone number because I've actually given my team the day off, but the link will work fine for you. There is your link. Days and weeks of the trading sessions, they're usually Tuesdays, and then I throw some bonuses in there. If I'm not making money, I throw more bonuses on so we can make more money. And if we're killing it, I throw more bonuses on just because I like to overkill people with bonuses. I think it's just a cool thing to do. All right, let me hit some questions here. If you got questions on anything, you can use that link right there to be one of the 25 people on today's webinar. I've got about a minute. Is this for day trading or swing trading? Both. I can't see the link. It's in the chat box. How does full-time people do this? You would place your trade in the evening and then just hold them over till the next day. Will this work on my platform? Yeah, you don't need my indicators. It'll just make it a little bit easier for you. Can I do this if I have a small account? Yes. Is it recorded? Yes, everything is recorded. Can you do this? I don't know all of you personally, but I have hundreds. And when I say hundreds, I have like 300 or 400 testimonials from people just like you taking this class. I'm just going to thumb through these. Like here, you can see $531, $2,500 a week. Here's one $2,000 on 2 contract. There's $1,000 trade. There's 1,287. These are just testimonial after testimonial. There's 4 of them on there. I can just thumb through these all day long. Here's $2,000. There's $2,400. Here's one $1,000. Made $1,000 this morning. There's another $2,000 profit from Greg. Here's one from Rebecca, Joe. $1,000, $1,000, 3,000 in 6 weeks. Number of winners, losers, 3 losers. So everybody that does this, I can't say everybody because that's too much. I try to go for about a 70 to a 75% success ratio. Once I get about 70 to 75% of the people profitable in the course, I call it a day. It's an on-demand course. It's 3 hours. And then I meet with you once a week, actually twice a week on Tuesdays to go through the markets when we trade them live. And then once I get to that 70% success rate, I then shut down the course after that. Beginner traders, how will this work? Yeah, I mean, if you've never traded before, I mean, I'll teach you everything you need to know about bonds. I mean, yeah, you're going to need a futures application in order to do it. I'm on the phone working, can't see the chat box links. So it's hubertcenters.com/bonds, hubertcenters.com/bonds. And I spell my name HUBERTSENTERS.com/bonds. All right, guys, I am going to get out of the way here. Here's another one from Edward. He made a whopping $5,650 on the bonds. The next speaker is up. Thanks for joining us on Saturday. If you're one of the 25 people, congratulations. I'll see you Tuesday on the live trading, 8 in the morning and 8 in the evening on Tuesday. Is this U.S. only trades? No, I trade the Bund too. I trade the Bund. What percent max drawdown is typical? It depends what's going on there, PS. It's a good question. But I have a 3-strike rule. I'm not allowed to lose 3 trades in a rule, and then I have to take 24 hours off. So drawdowns, I mean, you know what the percentages are on the pullbacks there. 41% can be 30%. So you might have to risk 156 4 or 5 times before you get one of those nice little runners, but then you just hold on to it and try to double up on that. Yep. All right, guys, that's it for me. Good luck. Hope it helps. Next speaker is up.